Hello and welcome to the next 100 Days podcast. My name is Graham Arrowsmith.
And my name's Kevin Appleby. Well, Graham, if you listen to the news at the moment, as well as everybody talking about inflation and high energy prices, another topic that comes up regularly is net zero and whether we're going to achieve it or not. So, it's idea is to talk about that subject today.
Yeah, absolutely. We have engaged the services of James Parritt, who basically, before long, is going to be launching a net zero investment fund. And we thought that James would be a really helpful voice in this sort of space, because net zero has an awful lot to it. But one of the key things for me will be getting us to that goal. Now, whether we make it by 2030, 2050, whatever it's going to be, who knows? But so today, James Parritt, welcome to the next 100 Days podcast.
Thank you very much, Graham, and thank you, Kevin. Pleased to be here. Please feel free to ask me any questions you like.
Right. Okay. Who won the 1973 FA Cup final? There you are. There's a question for you.
Go on, Kevin.
That was a
you're passing
That was a very, very sad day when somebody.
It was sad for me.
Noses in it ever since.
No. Okay. Fair enough. We'll limit the questions then. In that case, James,
net zero,
to something like net zero. Can we start with something that's really straightforward? What does net zero mean?
Net zero is a balance between the amount of carbon dioxide that's put into the atmosphere and the amount that's taken out. Hopefully they should be the same. So what's put in through emission is then taken out. And that's the balance. That's net zero.
And sorry, for me being, James, I am a bit dim. What do you mean by taken out?
Things like there are processes called carbon capture, where the carbon dioxide, for example, is sucked down out of the atmosphere. Okay. So what fossil fuel burning puts in through its pollution, that smoke, if you like, is sucked down and taken out. Right. So there are big carbon, excuse me, there are big carbon capture projects and things like that happening all over the UK.
Carbon capture, that's plant a tree then, James?
Carbon capturing can be planting trees. Absolutely right, Kevin. Yes, it can. It can. But there are projects such as Project Jackdaw, which is up in St Fergus in Scotland, where Shell are using all of their below ground pipes from 50 years of extracting gas to now capture the carbon from gas they burn up there into these pipes. And then they take the carbon from there, put it into molecules, and then the hope is to transform that into hydrogen, which, as we know, is a sort of replacement renewable energy to carbon burning things.
So when that goes into at some stage hydrogen fueled cars,
yes,
will that spill out the back end as water when it goes through the process of power?
Yeah, apparently so. I think the first ever hydro van was done by General Ford Motors, I think in 1969 or 79, something like that. And on the market today, there's Hyundai and Toyota have hydrogen powered cars. But in answer to your question, yes, it will just be water that comes out at the tailpipe. Yeah.
So there's a sort of a virtuous circle there. So getting to that place resolves so many of the world's problems, because the way in which net zero seems to be falling to ground at the moment is it's causing people an awful lot of worry.
Yes, it is. It certainly is. And I think that that's something that has to be managed, because since Al Gore 15 years ago brought this up in his video about climate change and everything to do with that, it has slowly been settling into people's minds. But now, you're right, there is a sort of panic almost. They're trying to install a panic, which I don't think is necessary, because I think the targets, they are very strict. But I think there's a lot of research that's been going on for a long time. And I think some of these projects will come on stream faster than people imagine. I'm not going to list out lots of new companies that we're looking at the moment on the website, on the podcast here.
No.
But from what we can see going on at the moment, some of these things are, like I just said, the hydrogen car is active.
Yeah.
They've got hydrogen plane as well, hydrogen powered plane, hydrogen powered submarines, hydrogen powered this.
not sure that I'd particularly want to be jumping onto a hydrogen-powered plane first flight. Maybe we could pack it full of Newcastle United fans and see whether or not it actually got as far as
hydrogen-powered plane. Hasn't that been done before? Wasn't that an airship?
It was.
Yeah, there was an airship. Yeah, there was. Yeah, absolutely.
Graham, just to carry on a theme, I said to James, plant a tree. There's a carbon suction unit. Well, do you remember the campaign, going back to your original question about 1973? Do you remember plant a tree in 73?
No, I was too tearful to remember anything from that moment. I was crying my eyes out because of Leeds losing in the cup final. But that's another story, another day. But one of the things I was looking at, James, apparently the government are planning to spend £400 million to build the first net zero prison in the UK.
Oh, right.
So perhaps something that you and I can, get sent to Kevin, because, if you're going to go to prison, you might as well go to one that's a net zero prison. But 400 million.
What? Net zero criminals?
Well,
net zero prison officers?
Well, I just don't quite know who's going to be, kept inside there. But I'm sure there will be lots of diversity of thought. Maybe you're just thinking the wrong things, and you end up in this net zero prison. I don't know, but
I think that Germany's spending 9 billion on implementing hydrogen, green hydrogen, because there are 3 types of hydrogen: grey, blue, and green.
Right.
So the green hydrogen is when it's created from renewable energy that's powered the process, essentially. Yeah, Germany's spending 9 billion on their hydrogen policies at the moment.
Wow.
Creating it's massive in Germany.
So that's just one. I read somewhere that I'm trying to work out whether it's each year. I think it's each year. There needs to be something like £2 trillion
Mm.
spent on projects getting us to net zero
That's right.
by I think they're thinking 2050. So that's a shed load of money. And the chances are it's a bit like, somebody making a calculation now, it's going to be a lot more when it comes to pass. But basically, that's a lot of money spent on projects. So you can, just like the highlight of the £400 million prison, is just to highlight that there's so many different things that are getting done that fall into the net zero basket. So is that one of the things that was behind your thinking when you started to think through, maybe we should be focused on net zero investing?
Absolutely right, Graham. Absolutely right. We want to take advantage of the market as it starts, and that's where we want to be placed. So all of our investments we're looking at would be focused on net zero carbon. Yeah. So,
and there's lots of them, isn't there? And does your fund, or will your fund, discriminate between the UK and Germany or whatever? You'll go around the world, will you?
We will absolutely be looking around the entire world, from emerging markets to current westernized markets, on different indexes and exchanges. We will be looking at the whole world. Yeah, absolutely.
And what's interesting, because I have spoken to you about this, and Kevin, you're going to be amazed when you get the answer to this question. But if I'm an investor right now, and I like the sound of this, how much will I be able to put into the fund initially?
Initially, in year one, you'll be able to put £10,000 into the fund.
Now, you've thought something through that I've never heard of before.
Yeah.
With that £10,000, you're offering something. Tell us more.
Yeah, we are. We're offering a guarantee that if we don't make any money for you, we'll give your money back, which is very new. Yeah. In full. In full.
So what you're actually saying is that I put my £10,000 in, and if you haven't made the money, and presumably that's at the end of year one, then you will refund whatever level the fund, your investment is at now. So let's just say it's, instead of 10,000, it's 9,500. You'll refund the full 10,000.
Absolutely right. Absolutely right. We're doing this so we can actually prove ourselves in the marketplace.
Yes.
Only on the first fund. Fund.
No, but that will to so many investors prove that you know what you're doing and you're making strides, because the chances are, well, tell me a little bit more. If I've invested 10,000, what kind of return should I be expecting from the fund, or what kind of return is the fund going to be offering?
That you'll be getting a 10% return on your 10,000 in the first year. Yeah.
Which, as you know, Kevin, is I think it's still a touch above inflation, but it covers you in a very, very good way, because, to be honest with you, your 10,000's kind of guaranteed anyway. But the 10% is a good return on investment.
Absolutely right. Yeah.
So, how confident are you of getting the kind of returns in the first year for those investors who find £10,000 to invest in this net zero fund?
Well, I mean, as I say, we've been doing it before on a private basis for people. So we've got several testimonials, and I think we are very, very confident in what we're doing. Very much so.
Yeah, I've seen the testimonials, and they're very, very keen on you and what you're doing, and it's very likely that you're going to make that 10% probably ahead of time. So that's interesting, because the proposition is, as I understand it, is that you'll get 10% in year one, but then investors will be offered the opportunity of going to the next stage within that fund. That's right. Of if you like, year two. And there is still some debate as to whether or not you'll be able to bring that one forward. So, for instance, if you got your 10% by, say, June of that year, then you might be able to sort of, accelerate to effectively year two. Now, in year two, you're asking people to make a bigger investment, which is £25,000. Is that right?
That's right. Absolutely.
And on that amount of money, which is kind of typical for a lot of investments for high net worth individuals, you're offering what amount?
15% return.
Wow. Now you're sort of talking very, very, very favourable rates. And that is on year two.
That's right.
And let's just say now that we're at the end of year two, Kevin, then the investor at that point is going to be offered the opportunity of extending their interest with the fund by adding a further 30,000. Now, on that 30,000, how much do you plan to offer as a return?
20%.
Wow. So we're going 10, 15, 20%. So those guys who stick around, they've had that guarantee in year one, proven themselves. They think they can then move with a bigger investment, which is a lot of people do. Once you've proven yourself to us, then people will come in with more money. But so what you're offering is this opportunity of getting to offering more money in the fund with bigger returns.
That's absolutely right. Absolutely right, Graham.
And the confidence must be there that the market itself, net zero, all these different projects, the companies that you're looking for, and we don't expect you to share them because it is fund. That confidence of making, of investing and making a return, you've done it for other people.
Yes.
And you're very confident that you will do very, very well for investors. If you like, on a scale of 1 to 10, how confident do you think you are when it comes to making, certainly, let's just start with a year one returns?
10.
Yeah. And because effectively you're saying, here's a guarantee.
Yeah, exactly. I wouldn't guarantee it unless I was certain. Yeah.
So, I mean, what you've got here, I mean, we've had some other investors, other investment opportunities on the show. And I've got to say that this is an area that I'm really fascinated in, because I'll be honest with you, James, I when we first came across each other, I wasn't a massive sort of net zero nerd, but one of the things I am is, I do have a grandchild, and I want to. There is some logic in this, whether the science is right or not. There is some logic in actually moving the planet to a different basis of the way in which it uses fuel, etc. There are questions in my mind about how quickly you do it and all the rest of that. but there will be, as we've said earlier, a huge amount of investment projects over the next 30 years that you will find out and be able to make money for investors in.
That's right. I think some of the larger funds out there are saying that $150 trillion needs to be spent every year up until 2050.
150 trillion a year. Well, my maths might have been wrong. It might be more. I must have been thinking about a week. But basically, it's a heck of a lot of money.
That's for the whole world. That's for the whole world.
Yeah, even so, though, that's a huge.
James, I've heard bits and pieces of this from Graham up to now, but I'm hearing this for the first time. So, can I just put on the hat of perhaps a cynical investor here?
Yes, you can.
Just say, hang on a minute. We're hearing about rising oil prices. We're hearing about rising electricity prices. Certainly a coal-fired power station that I worked on, did a project on a few years ago, which was due to shut down in 2018, 2019, is being kept open because of the current energy crisis. We're hearing politicians say that all these net zero ambitions, we're going to have to put them on hold for a bit because of what's going on at the moment.
Yeah.
Now, separately, I'm hearing big things about, there's a recession on its way. It's going to be the biggest dip that we've had since maybe 15, 20 years.
Yeah. How
does that stack up with the success you're expecting out of these investments?
That's a very good question. I think that while all of that's going on, you see that the energy companies out there are making like £6 or £7 billion profit a quarter from the increased bill prices, which is shocking. So the government in this country has what's called a windfall tax on big energy companies, where I believe 25% of their excessive profits have to be put back into Project Jackdaw and various other projects like GoldenEye, which are all in the North Sea, where they intend to carry out carbon capture. And they've got so much space in the North Sea for carbon capture that the rest of Europe will have to use the same pipelines that they're using. I think 66 or 67% of Europe's carbon capture will go into the North Sea project there.
Yeah.
So the jobs that will be created will be phenomenal, and the amount of investment the government's actually putting into those projects is substantial.
It is challenging, Kevin, because when you look at emissions, if you add China, India, and Russia together, they make up 40% of emissions. Yeah. And how much do we make? I think it's about a 1%. Yeah. And the so-called pain, and there is pain, as we've discussed. Here, at the moment, they're probably thinking to themselves, well, we're going to build more coal-fired power stations. Yeah, eventually we'll get round to it. But once we've made ourselves in China into the world's power, or, India and Russia a lot more wealthier than we are now. The thing, and, you in the West have had your heyday. Now it's still our turn. But the thing is, their intransigence, shall we say, is going to affect us. We don't. It's the same world. We're living in the same world. But is there a real? How's it all going to play out, James? I mean, because geopolitically, but basically, how does that impact investing?
Well, talking about China, for example, they do have some pretty large hydroelectric renewable energy plants out there, like on the Yangtze River. I think that's the largest dam in the world, and it delivers quite a high percentage of their energy requirements. And they are investing heavily into renewable energy projects there, very much so. So they are progressing. I think they've got to align to 2060, China, not 2050.
Yes.
They've agreed to 2060 target. But they certainly, I take your point on their sort of industrial revolution, if you like, is what they say they're in at the moment, isn't it? So they're talking about their pollution, but they are delivering on. They've got another project called The Wall, which is an enormous sustainable city that they're building. So they are putting the plans into implementation out there. They are, yeah.
Well, let's hope so, because I mean, if the Chinese follow suit and then I think the Russians and the Indians will do exactly the same thing. But I think the Chinese have got to do it, and then put pressure on, shall we say, the lesser powers to get their act in order as well. But
they're building hydrogen ships as well, so that all their export to America will go through hydrogen ships to get to the States. I mean, they are doing a lot on all of their different aspects of economy. Yeah.
So, being an investment fund manager, in effect, you have to stay abreast of a number of these trends. Is it quite taxing to do that?
Yeah. There's a lot of reading that takes place. Let's say that. Yeah, you read like 4 or 5 novels a week. It's intensive. Yeah, it really is. Yeah.
But it's easy for you because, if I understand it, your history, you've actually got 4 degrees. Is that correct?
Yeah, that is correct. Actually.
Wow. I mean, Kevin, you've just got the 1, haven't you, Kevin?
Well, the one plus an accountancy qualification, Graham, which is harder to get.
Well, that takes away from the 1, I suppose.
You've got 2, haven't you, Graham? You've got 2.
I've got 2. I mean, they wanted to offer me more, but I said no. That's enough. That's enough. But seriously though, 4 degrees. Tell us a little bit more about them, because
they're basically. I was trained as an architect, so I had a few degrees in that training, and then. I did a master's to become an urban designer, which is a bit like a doctor and a surgeon. So I'm a qualified urban designer as well.
Wow.
It's just, and I did 2 of those degrees at the same time, which is even.
Wow.
But I don't know if that makes me clever or not. Really, I'm not sure if it makes me clever.
Well, you might have bribed them. Who knows? I mean, but I don't think
my partner's much more streetwise than me. He says I'm a bit academic. So. You've met Stoyan, haven't you?
Yeah,
he's more street. He's a proper trader. He's much more streetwise than me. Yeah.
Well, but that's the beauty of it. Sometimes you need different types of characters to make this really work. And yes, you've got kind of Stoyan's much more hard nosed, very, very, I would say, black and white numbers all over it. There's a sense of drama with him. I think with yourself, there's a very cultured sort of view of the world and looking at the projects and getting underneath it. And I think that between the two of you, you've got a real opportunity to deliver for investors.
I really hope so. Yes.
So, James, you've got a company who potentially wants investment. What process do you go through to validate that investment?
There are a series of steps that we go through. The FCA at the moment is defining a sustainable checklist. So all companies will have to submit their criteria to the FCA to approve, which should be coming into fruition very soon. But ourselves, the first things we look at are the financials, to be honest. Mm-hmm. So we look at their size, their liquidity, their forecasts and that sort of thing. And then we start looking at their sustainability aspects as well. It's not always first. It depends on the business. Some businesses in the renewable energy sector, it's obvious that they are, green, as it were. But we normally start with the financials.
Yeah. There's going to be a big difference between a green business that is worth investing in and a green business that's a mad idea that might never catch on.
Yeah. Exactly. Yeah, there's some really interesting green tech businesses out there at the moment that they've been testing for 10 years and they're scaling them up at the moment. It's fascinating stuff. It really is. It's really fascinating.
And the people looking at these, the difference between your fund and perhaps funds that you've got in other similar areas is that yours is a purist net zero fund.
Absolutely right. Absolutely right.
Tell me a little bit more about that, because to be honest, that would have been a very, very clear decision on your part to be that, but you didn't have to be that. You could have been a fund of funds or whatever.
Well, it's to be purist net zero carbon. I mean, we're having this debate at the moment in detail. It's whether or not we look at transitioning companies who are transitioning into net zero carbon or not, or whether we just go solely with net zero carbon companies. Yes. There's hundreds I could list in each sector. So some of the big energy companies at the moment are trying to transition themselves into net zero whilst continuing to burn fossil fuels in the background. So it's almost like they're trying to offset and plan for the future at the same time, because they don't want to give up their assets like huge oil fields and things like that. They've already got licenses on to drill and everything else. So they don't quite sit within our fund, actually, because they're not purist. So
it's a bit like, I'm a mass murderer, but I'm transitioning to being nearer being a vicar. The truth of it is, you're still a mass murderer, but you're just getting slightly, times ebbing away. I just don't see it that way. I think transitioning is fair, but it's not pure. And actually, because none of very, very few companies have started completely pure, apart from, as you say, those new companies who are coming along, who are basically going to provide the big services of the future.
Yeah, absolutely right. Absolutely right.
Transitioning companies, though, you could say that Shell was like that, couldn't you?
You certainly could.
And if that was the case, is it feasible that you might change your pure focus on net zero to include transitioned? Shall we say they are substantially down that route? Is it fair to sort of, because if they are doing that, maybe their returns might be worth having? Yeah, there is an argument for that. It's a tricky line to cross, but Shell, once they hit a certain criteria, which will be in about 5 years' time, I think, then we would work with them. We would, but we're not going to work with them at the moment. Not right now. No. Right. So okay, in which case that will be something I'm sure your investors will want to know about. Yeah. But I do think there's an honourable way of actually looking at this, that you're going purist net zero, which is, it puts you right in the middle of the maelstrom that's going around on that. But that's got to be good. The one thing that you're not is you're not swampy, are you?
We're certainly not swampy, and we're not Extinction Rebellion. We're certainly neither of those two. No.
Actually, in some ways, if I was to look at this, I'd be thinking that they're the antithesis. Well, I can't even say the damn word, but basically they're the opposite of what you really want to achieve for people, because effectively they're creating annoyance with the whole program, because frankly, they might have deep down good intentions, but their behaviours, all they do in it is almost like virtue signaling and really hacking people off, stopping people getting to work, doing whatever, getting involved in football, for goodness sake. I mean, the guy who tied himself to a goalpost sounds a bit like your goalkeeper, Kevin, doesn't it?
We'll probably have to tie one of them to a goalpost. We've got too many this season. We've got to sell one, Graham.
You don't need to sell anything anymore. The world's richest club. I don't know whether Newcastle United would be capable of transitioning, because they've got their money from oil, haven't they? Really? Yeah. So it's going to be difficult to put them into your fund, I guess. And actually, you're probably losing an awful lot of money on Newcastle United. I wouldn't bother doing that, James.
I'd look at it another way, Graham. They're only spending what you and I have spent on topping our cars up with petrol in the past.
Yeah, well, as you know, I don't do that anymore. I top it up with coal-fired electricity.
Exactly.
At a lower price. I mean, who's the fool now? Anyway. But going back to you, James, the opportunity of finding more and more businesses that you can invest in on behalf of your investors and get that kind of return. It seems to me that there's an awful lot. But to Kevin's point earlier, aren't you dealing with companies at the beginning of their development, and therefore slightly more risky?
You could say that, but I think considering the amount of investment that's going into the marketplace, we don't believe it's that risky, because these companies are producing what the governments want. I mean, even if you take other countries where they're actually transitioning themselves. So if you took somewhere like Indonesia, for example, where they're situated on the ring of fire with all the volcanoes, they're transitioning from coal, which is their majority for their energy, into geothermals, which all comes up from beneath to power turbines. So some of the businesses out there are just incredible. Their growth rates are incredible, absolutely incredible. So as I said earlier, we're looking at the whole world at the same time here. Yeah.
Kevin, having something to do with accountancy, might be interested in the answer to this question, but isn't your father something to do with accountancy?
Yes, he is. He worked at some of the big five, but also he was president of the ICAO, which I think stands for the Institute of Chartered Accountants in England and Wales. Yeah, he's president there, and he's still practicing and working 18 hours a day or something like that.
But didn't he start one of the big accountancy groups?
Yeah, he handled a merger. He was involved in the merger of one of them. That's absolutely right. Yeah.
Okay, all right. Well, Kevin used to work for one of them. Was it Kevin?
I was merged from Coopers and Lybrand into PricewaterhouseCoopers.
Oh wow, very interesting.
So Kevin's something of an expert in that field.
Very good.
Then subsequently sold to IBM.
But
I've been through a few big transfer deals, you see, Graham. Unusual.
Yeah, the thing is, transfer deal is exactly this. I mean, James, you're going to start this fund, and there's an awful lot of excitement about it. And the truth is, net zero investing, you got to be blind to think that it's just not out there in front of you. There's so many things going on, so many real opportunities for businesses to make their mark and actually offer real value and improve in value, that investors will definitely want to get into it. There's just too much money going into it. There's going to be a gold rush.
It is very much.
Graham, clearly, your background in finely fettled, you're very interested in investors going to this. Now, if I look at my background and grow CFO, what we're talking about regularly to finance leaders is the process of taking your company through a fundraise.
Yeah.
So, is there anything in here, James, that if any of my finance people are listening to this podcast and thinking, this looks like a fundraising route for me possibly in the future. Now, is there anything different about coming to you for a fundraise than going anywhere else? My first question, what stage in the fundraising cycle do you get involved? Is this seed funding? Is this Series A, Series B? Where are we in that cycle?
In the cycle, we've got some seed funding at the moment. So I guess what we're doing right now is raising the money for the first fund.
Mm-hmm.
Yeah.
So it's not about Vitpar, which is your company name, offering, if you say, loans of some sort to your finance directors as such, Kevin. But I think it's more about investing in the companies themselves, who and they won't be day one.
That's what I mean by fundraise, Graham. This is where a CFO and CEO would be going along to the market and saying, we need to raise funds, and they would be giving equity in the company for that money.
Is that how you see this fund working, James?
We've looked at that structure where we're effectively standing as I think what we like to do is stand as a fiduciary for our investors. So we look after their money and protect their interests rather than give away equity in the actual business. I think, would be our preferred route.
No, but that's fine. You're acting as a fiduciary in terms of your company. Now, that money that you've received in, what are you effectively buying with it? Where's it going?
The money that we receive from our investors. Yeah, we're buying into startup companies, so it's partitioned across the portfolio. So we're buying into some startups, we're buying into some well-established businesses, we're buying into a small bit of crypto, which I know everybody worries about, but there are some very good net zero crypto businesses that are coming up there, which we're really interested in. And then we are hedging part of our portfolio as well against various stocks and shares that are net zero carbon as well on a day trade basis.
But where you're investing in a company, you're effectively buying an equity share in that company.
The underlying asset, exactly right.
So that's what I'm saying about it. One of my CEO CEOs, CFOs coming along and saying, we need to fundraise for our company, which is producing in the green
Yeah.
space.
Well,
They would be coming to you and saying, can we have some money, please? Here's the prospectus and so on. What particular things would a CFO of that sort of company need to be thinking about if they were coming to you as part of their fundraise round?
I think they'd really need to be looking at how they measure up against I don't want to quote all of these abbreviations, but against somewhere like the III, where the Impact Investing Institute, who are currently classifying companies and businesses under the net zero carbon and under the good sort of ESG, environmental, social governance type package. They're really scrutinizing businesses. And if they could align to their targets, then we would certainly be investing in them.
So certainly you'd be looking for a company that was already reporting extensively under ESG?
Yeah, I would. Impact investing is a slightly higher raise than ESG. ESG has been going on for about 15 years now, hasn't it? Something like that, since Al Gore's speech and all that sort of thing. But the impact investing is much more rigorous, and they're attracting a lot more funding from governments and things like that into those businesses. So yeah, that's what we're looking at. Yeah. Yeah.
The future though will be, you will be finding businesses around the world, and you'll be taking equity positions in there with their stocks.
Yeah.
Sorry, buying their stocks with the view that those stocks are going to appreciate over time.
Absolutely right. Yeah. Absolutely.
And if you're as successful as you're not just looking for one fund. I do know your ambition is quite clear for Fund 1, but it means that it wouldn't take much to get you into attract enough people to get into Fund 2, Fund 3. If you got into the second fund, which would be separate from the first fund.
Yes.
Would anything different be happening for those people, or would it be just a repeat of the process again for those people further down the line?
It would be a repeat of the process. The only variation we may bring into play is that we might be able to make the returns slightly faster than a year, because we'll be so well versed in what we're doing by then. We may have cracked the code.
Yes.
And hopefully we might be able to deliver faster, is what we'd like to.
I mean, I think you're trading in an area that it's going to be difficult not to spot in the nicest possible way. Companies that are on the face of it are going to do extremely well through net zero, because with that focus on that, a laser focus on that, you're not looking at the rest of the market as such. Maybe but the point is, by focusing on these people, then you're going to make your fund stand out amongst its peers.
Absolutely right. And I think because we're quite agile, because we're a new fund, that the way we navigate is very quick. Where big funds, for them to make a decision can take quite a bit of time. But for us, it's very much, we're doing the research, we're looking at the forecasts, we're studying, and we can implement our changes very, very quickly.
If you manage to get your returns quickly for the first fund,
yes,
those investors who might be hearing this for the first time and thinking, I want a piece of that. And what we're going to do in the show notes is that we'll put a link to where you go to access you and your fund. But basically, if you've done extremely well in year one with the year one funders, can you see a situation where you will effectively go to the second stage, phase 2 with investors before the year's out?
We certainly can see that happening, yes. Yeah. We're very anxious to get started immediately because things are just changing every single day. The gold rush, as you rightly pointed out earlier, is coming. So we certainly do, yeah.
And I think most generations have something like that, whether it's a .com boom or whatever. Most people, there's something like that goes on, tech stocks, all that kind of stuff. Yeah. Crypto is definitely seen as part of that. Yeah. Although it's kind of does worry me a little bit, but nonetheless, we've had people on talking about crypto before, and it's definitely got a place. the thing is, James, you are handling people's money. So, like you said earlier, it's a 10 out of 10 for you in terms of certainty about making money here.
Absolutely right. Absolutely right. Yeah. I think we're going to be very transparent as well about all of our accounting and everything else, which is going to become even more of a play with big organizations at the moment. So, we're totally in play.
And you're a very accessible person. And the point, your company will be known as VitPar. And that's, if you like, the two names of the founders put together. And when you sort of search that as a sort of in a Latin dictionary or something similar to that, it comes up, believe it or not, Kevin, with a very, very unique bird. Remind me, which bird is it, James?
It's the titmouse bird.
Now, the thing about a titmouse, Kevin, did you know this, is that it's very agile, and it's kind of bold and brave. But when you put bold and brave together, you can actually, there's a great word called hardy. It feels like it's net zero. It feels like it's sort of green and that sort of thing, hardy and green and all that kind of stuff, and woods and stuff. And you've got the titmouse as being your sort of emblem, and it features in your logo. But agile, hardy, net zero. Well, investing, and that's what you do, isn't it?
Absolutely right. Yeah, absolutely right. Correct.
You're impressed with that, aren't you, Kevin? I can just see that. Yeah. So, look, the truth of it is, we wish you all the very best. And if anybody's any investors are watching this, then they can get in touch with you to get going. And you should be, shall we say, on the market fairly soon, within a few months, and that's when you'll be kicking off. And so hopefully by the end of the football season, this football season coming, Kevin, hopefully I'm still in the Premier League, although I'm not so sure. Then you might be kicking back. You might be going for the next level up, and that will be quite an interesting outcome.
Absolutely.
Just the final question, James. You obviously, your background in sort of architecture, planning, and so forth, does that mean some of the investments you're looking at might be in sort of property or something akin to your particular background?
Yeah, absolutely. Yeah, we've I for 20 years I've run a developer contractor business where we were delivering affordable housing and schools for the government in London. So a lot of people I know are in property doing the same thing. I've also got a small development company that I'm running. So we may look to invest in some of those projects, where with the guarantees are backed by the government for exit. So we may.
Well, I don't know about you, Kevin, but investing in net zero seems like it's a no-brainer. Don't get me wrong; there are going to be things that will work really, really well, and others that not so much. But I'd rather back somebody who's looking at it day in, day out. I don't know about you, Kevin.
This is it. I'm minded of technology as it's grown up, and there are some techs that catch on and other techs that don't. And if you were the company that invested in the Betamax video recorder, you probably didn't make very much money, did you? So when new tech is emerging, you've got to have an inside track on it. You've got to have people that know what's going on to a very, very great amount of detail.
Yeah, absolutely. Totally agree.
And you probably need somebody with 4 degrees, Kevin.
Well, Prince Charles would probably tell you 3 degrees are quite enough.
Oh. Yeah. Well, I don't know whoever funds him saying things like that. Anyway, look, it's been an absolute pleasure, James, having you on the next 100 Days podcast.
Well, Graham, that's a very, very interesting field in potential investments, and to me, it feels a little bit like the Wild West. You're riding out there into stuff that's new, a little bit scary, and all the rest of it. But it sounds as though there are big returns to be made.
Oh, there are, and the reality is there are some very, very challenging obstacles to overcome, whether that's in carbon capture or whether that's in, I don't know, producing fuel at lower costs than, the renewables and so forth. And you just think, I wonder whether or not this fund is going to be exactly where people who have an interest in net zero, who want to see it work, but they don't want all the fanfare and the blowhards, people saying, right on and all that kind of stuff. This is hard-nosed investing. This isn't about sort of waving a flag saying, I'm a net zero investor. I would be totally happy for every single one of his investors to say nothing to anybody, but just to enjoy the returns. And the returns are significant. So from that point of view, that's one thing. But, if you really wanted to sort of drop it into a dinner party conversation, you could. But, you don't have to, get emotional about it. It's something that is going to be a hard-nosed business decision. And that's why I kind of think almost like their natural enemy, in a weird way, are those people who are sticking their hands to motorways. They're not helping.
It's true, Graham. The climate crisis is not going to be solved by big speeches and protesters sticking hands to motorways. Yeah. It's going to be solved by the right technology coming along, and the investment going into it. Now, no matter how much government says it wants to do something, if the companies supplying the technology aren't there in the first place, there's not an awful lot you can do.
No, absolutely.
This is the logical first step into really making a difference. If the tech is there, if the companies are there that can provide the tech, then if government follows up by spending money on buying the tech or putting regulations in place, such as we've potentially got with windfall taxes and oil companies, then it's going to work. That is the way the world changes.
I don't profess to know everything about net zero, and all I would say is that what you've just said is absolutely at the heart of the investing decision. It's not about the emotion as such. Yes, emotion will play a part to get you interested, but it's not about being, putting up a three-letter acronym or something around your LinkedIn picture. It's not one of those things. For me, it's a hard-nosed business decision. It's your portfolio. Can I make money from net zero? Yes or no? And I think the answer is a very definite yes. If you were to quote James, it's a 10 out of 10 yes. Yeah. And I think that's the certainty that I think this has got.
Yeah. Now the bit that I'm really interested in, Graham, clearly you're interested because your business is trying to help people find those high net worth individuals. Mm-hmm. Part of my business is around training finance folk in order to do their part of the job. Now, in Grow CFO, we've got the fundraising simulator that takes finance professionals through a journey of this is how a fundraise works, this is how you prepare things, this is what you've got to put together for the investors, this is how you will work out to get your funds. A little bit like the podcast we did a couple of weeks ago, where you're taking graduates and you're taking through that process where they get a graduate job. We're taking CFOs and helping through a process where they can go in and they can take their company through a successful fundraise. Now,
sure.
The bit that's concerning me a little bit here, and I would like to know a lot more about, is that there are going to be a lot of companies looking for funding in this area.
Yeah,
I get the feeling that one of the reasons James is saying this is potentially got such good return is that he's got so many companies potentially to choose from.
Yeah, I don't think you think you should be thinking of this as being seed funding. It's not going to be like that. It's going to be, these people are going to be listed. In many cases, that they might have been listed for years, but they're picking their moments. They'll have spotted things that they've got, maybe won a contract, where it's going to be. They'll do the normal research that enables the investment side of it to be to make a return for their investors.
Yeah.
And the truth is, knowing a little bit on about their forecasts, they've more than enough headroom to make the kind of returns that they're offering. So the opportunity is there for investors to get behind this fund. And there are other funds out there, and we would always say do your research, but this is something that you really would want to get to know more about. And if you're interested, then we'll put a link, and we will make sure that you're one of the first people who will get full information about this opportunity. And certainly, I think maybe you and I should be on that list first amongst equals.
Could well be, Graham.
Well, yeah, I know, but it's a relatively modest amount first year round, and but let's see how we all do. So, I suppose with that said, I've been Graham Arrowsmith.
I've been Kevin Appleby. Goodbye.
Goodbye.